Hey everyone, and welcome back to Everything Tesla Stock. Tesla has just recently experienced a crazy trip on the stock market. Let's talk about the enormous bombshell that Cathy Wood just delivered. Tesla has been the subject of numerous headlines, but Cathy Wood's recent bombshell will undoubtedly be the most significant one. So today, we'll discuss Cathy Wood's shocking revelation, as well as her forecasts for the price of Tesla's stock. Since you don't want to miss out on this, stay tuned until the very end. Before we start though, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Cathy Wood is the CEO and CIO of ARK Invest, an investment management company with offices in St. Petersburg, Florida, and which manages billions of dollars in a number of actively managed exchange-traded funds. Wood rose through the ranks of Wall Street, beginning as a stock analyst at asset management Jennison Associates, and ultimately rose to the position of Chief Investment Officer at AllianceBernstein. The 66-year-old celebrity investor has racked up millions of devoted followers all over social media, thanks to her compelling views, which she frequently expresses on her YouTube channel and in her tweets, including the incredibly huge bombshell that she recently just dropped about Tesla stock. ARK Invest, run by bullish investor Cathy Wood, is perhaps one of Tesla's most notable backers, having correctly predicted much of Tesla's surging stock through 2019 to 2021 in the years prior. Some feel that Wood's recent purchase of an additional 3,000 Tesla shares is the big bombshell that could predict a new high for the price, with ARK demonstrating its positive hopes. Tesla is regarded as one of Wall Street's miracle stocks, having experienced some of its greatest years during the coronavirus pandemic. Cathy Wood, the founder of ARK Invest, gambled heavily on the stock, and while she has typically profited from the company's developments over the years, she remained confident about the company's future, despite the present bearish outlook. She bases her belief on the company's inventive spirit, which has propelled it to be the top of the electric vehicle competition list. What we said during COVID-19 about innovation, solving problems, will move into overdrive, she told a webinar, with Tesla poised to deliver truly exponential growth for many, many years, as it expands its autonomous driving programs. Tesla has provided significant returns to long-term investors. Shares of the electric vehicle leader have increased by more than 1,300% in the last 5 years. Cathy Wood and her ARK Invest team believe that this bull run is far from over. ARK updated its Tesla projection in a recent study dated back in April 2022. Tesla's share price is expected to reach $4,600 by 2026, according to the innovation-focused investment firm. This is a potential gain of more than 425% over the current price of the stock. Tesla's EVs are flying off the shelf. The Model S, X, 3, and Y deliveries reached 310,048 vehicles in Q1, a 68% increase year on year. However, ARK's optimism for Tesla is based on a product that is yet to hit the market. Tesla's prospective robo-taxi business line is a key driver, contributing 60% of expected value and more than half of expected EBITDA in 2026, noted ARK analyst Tasha Keeney. Tesla is a pioneer of autonomous driving tech, yet all of its vehicles require a driver for the time being. A robo-taxi, on the other hand, will not require a driver and will not have a steering wheel or pedals. The product has not yet been officially introduced, but Musk stated on the company's earnings call last week that they're aiming for volume manufacturing by 2024. The product might be a low-cost alternative to public transport, which is becoming increasingly pricey. Looking at some of our projections, it would appear that a robo-taxi ride would cost less than a bus ticket, a subsidized bus ticket, or a subsidized subway ticket, Musk said. According to ARK simulations, Tesla stock is worth $4,600. It is not the only figure worth mentioning though. Tesla's bull and bear scenarios were also offered by ARK Invest. According to ARK's optimistic scenario, Tesla sells 17 million cars with an average selling price of $30,000, generates $486 million in autonomous ride-hailing revenue, and commands a share price of $5,800 by 2026. In a worst-case scenario, ARK's model predicts Tesla selling 10 million cars at an average selling price of $38,000 and receiving only $51 million in income from its robotaxi fleet by 2026. In this situation, the expected share price is $2,900, implying Tesla still has a triple-digit potential. ARK's optimistic view should come as no surprise. The largest holding in ARK's flagship ARK Innovation ETF, ARKK, is Tesla, which accounts for 9.6% of the fund's weight. The company's ARK Innovative ETF, an exchange-traded fund that invests at least 65% of its capital in domestic and foreign equity securities of companies relevant to the fund's investment theme of disruptive innovation, was named the best US equity for 2020. While this fund's growth has slowed down significantly, Cathy Wood believes that investors' hunt for a really disruptive innovation will drive them back into technology equities, bringing the fund back to its glory days. Cathy Wood has a large and devoted following in the investment and technology worlds, and that's due to her unwavering conviction in disruptive innovation and unique insights into financial markets. Wood's diverse viewpoint was also on full display at the Mahaffey Theatre during the Powered Up Tampa Bay Tech Festival, where the ARK Invest CEO sat down for an enlightening fireside talk with Joe Hamilton, publisher of the St. Pete Catalyst and head of network at Meta City. Before discussing the creative technology, inflation, and cryptocurrency, Hamilton asks Wood to tell him a story which he'd never get tired of hearing: why she moved her investment firm from New York to St. Pete. Although we did look at a lot of both no-tax and low-tax states, we were drawn to Florida, specifically the Tampa Bay region, because of its vibrancy and because it did seem to us like it was going to be the next Austin, said Wood. And I do mean the Tampa Bay region because I don't think St. Pete can do it all by itself. Wood described advances in AI as mind-blowing. Despite ARK pushing the envelope on AI's possibilities, the investment icon stated that technological improvements are happening faster than she expected. Wood claims that merging hardware and software reduced artificial intelligence training expenses by 60%. She then dropped another bombshell proposal, delivering her fresh-off-the-press research review on the technology. "This isn't even our big idea for 2022, said Wood. "We believe we are 6 to 13 years away from the Holy Grail, artificial general intelligence, at which point we will see an inflection point in productivity, and it's going to be pretty mind-blowing." While ARK Invest's recent Tesla acquisition may forecast the stock's new bottom, Benzinga notes that the chart has both positive and negative indicators, which may keep the manufacturer in a bind. In any case, though, Tesla is actually still on the company's second largest ETH stake, trailing only Zoom. ARK Invest also brought about 15,858 Tesla shares in May, after dropping $66 million in the stock following the automaker's first quarter earnings call. While recent pickups suggest that ARK is aiming to average higher, the chart indicates a few distinct types of indicators to watch out for. Although the chart indicates some daily bull flags, bears points to the stock's 8-day exponential moving average, EMA, going downward this month, which many believe will prevent the bulls from playing out. If that happens, analysts predict that Tesla stock will rise $863, based on a poll conducted between May 25th and 31st. Tesla, like many other automakers, has stalled in its Gigafactory, with the Shanghai plant in late March and early April shutting down due to a surge in COVID-19 cases. And this resulted in a 22-day production halt, with Tesla CEO Elon Musk recently warning about the direction of the US economy. Well, it's all difficult to predict what exactly is going to happen to Tesla's stock in the coming months. Nonetheless, though, Tesla's stock split was officially announced in June, with the company planning to do a 3-to-1 stock split. This means that present shareholders' shares are going to triple, for example, from 5 to 15, while investors' entry-level prices are going to be reduced entirely. In June, Tesla's Fremont facility set a new peak for daily production output, while Gigafactories Berlin and Texas continue to scale up production efforts. Without even considering the forthcoming revenue streams from self-driving taxis and the Optimus humanoid robot, Tesla continues to dominate the electric car sector, and it is actually well poised to take on the next chapter of technology markets. Until recently, Tesla was a relative outperformer in Wood's ARK innovation portfolio, despite other components showing significant losses. Tesla was ARK's highest contributor last quarter, adding 40 basis points, or 0.4%, to the fund's performance for the 3-month period, which ended in March 31st, while ARK reported a quarterly loss of 29.93%. Roku and Zoom, which are currently among the top 3 largest holdings, were the fund's biggest detractors, accounting for 2.9% and 2.3% of the fund's total losses for that period, respectively. What are your predictions? Let us know down below, and thank you for watching. While you're still here, go ahead and click on one of these 2 videos on your screen. See you there.